Welcome back to Investing Talk Podcast. Today, we're zeroing in on a company that's generated a lot of buzz, Terawulf, and we're tackling a question many of you have sent in. Is Terawulf a good time to buy now? We're going to unpack this using the detailed sources you've provided, aiming for a clear picture of its financials, its strategic moves, and what the market seems to be thinking. Before we jump in, if you find this discussion helpful, please do remember to subscribe, hit that like button, and maybe leave a comment. And hey, if there's another company you want to look into, just drop its name in the comments below.
Yeah, it's a really good question to ask right now, especially with companies like Terawulf. They're kind of complex, aren't they? They operate at this interesting intersection.
Yeah.
You've got traditional energy, digital asset mining, and now they're moving into high-performance computing, too. It's a fast-moving space.
Okay.
So yeah, we need to look at the fundamentals, the numbers, but also these newer ventures are getting into.
Okay, let's start there then. Let's really understand Terawulf financial pulse, their core business performance. The numbers, well, they tell quite a story. For the fiscal year ending December 31st, 2024, Terawulf reported total revenue of $202.7 million. Now compare that to $134.6 million in 2023. That's a really significant jump, right?
Huge jump.
And it's not just a yearly thing. Their second quarter 2025 revenue, that came in at $47.6 million, so up 34% year over year. Still strong growth. But what really catches my eye here is the improvement in gross profit and margins. In 2024, they hit $86.4 million in gross profit, pushing their margin up to 42.7%. That's way up from the 29.9% they had in 2023.
Yeah, that jump in gross margin, it's not just nice to have, it's pretty critical. It really points towards genuine operational leverage. What it suggests is they're getting much more efficient in their mining operations. They're past maybe some initial growing pains. We're seeing better efficiency, lower direct costs, maybe better energy deals, maybe more optimized hardware, something like that. And that kind of efficiency, well, that's a real advantage, especially as the Bitcoin mining sector gets more competitive and energy costs are always a factor.
Right. But despite that revenue growth and the better margins, they still reported a net loss, didn't they? $24.8 million for 2024. Still, context is key here. It's a massive improvement over the $92.5 million net loss for 2023.
Exactly. Huge improvement.
So the trend is definitely moving in the right direction. Even if the EPS isn't positive yet, losses are narrowing.
Precisely. And looking ahead, the analysts seem to think Terawulf could hit break-even, maybe even a modest profit sometime in late 2025. That would be a big milestone. But, and this is a big but, this forecast is super sensitive to things they don't control, mainly Bitcoin prices, obviously, and the overall network hash rate, how hard it is to mine. Big swings in either of those could totally change the picture. So you have to take those projections with, well, a grain of salt.
Okay, let's shift from profitability to just their overall financial health. Looking at the balance sheet, as of the end of 2024, total liabilities were sitting at $206.6 million. A big chunk of that is $130 million in convertible senior notes due in 2031. Those were interesting financing now, but potential dilution later if they convert to shares, right?
That's the trade-off, yeah. It's debt that could become equity.
On the plus side, though, their cash position looks much better. They ended 2024 with $65.4 million cash. And that grew to a pretty impressive $90 million by Q2 2025. And maybe the best news, financially operating cash flow. For fiscal 24, it turned positive, $54.2 million. That's a huge turnaround from the negative cash flow they had the year before.
Oh, absolutely. That positive operating cash flow, that's incredibly significant. It means the core business itself is now generating cash. It really validates the model and the scale they've achieved. They can actually fund operations internally now, at least partly. However, you still have to see that they rely on external money for the really big expansion projects. And that means potentially more dilution for current shareholders. We've seen it already, right? More convertible notes, shares issued for that Google deal. And now they're asking shareholders to approve authorizing even more shares. It raises capital, sure, but it waters down existing ownership. Investors need to watch that closely.
Okay, let's pivot to strategy then, because Terawulf isn't just digging for Bitcoin anymore, are they? They've got their two main sites, Lake Mariner and Nautilus. Combined, that's 400 megawatts of capacity. That's a lot of power. And their Bitcoin mining specifically hit 12.8 exahashes per second in Q2 2025. That's a quintillion calculations a second times nearly 13. Just mind-boggling compute power. And that's up like 45.5% year over year. But the real differentiator, I think, is their energy source.
Yeah.
They keep pushing this sustainable power angle, hydro, nuclear, which means lower energy costs, a huge plus in mining, and less regulatory risk too, right? in this carbon-conscious world.
Definitely. And connecting that to the bigger picture, that focus on sustainable energy, that could be a serious long-term advantage, a moat almost. It's not just about ticking boxes. It gives them a cost advantage now, and it makes them more resilient if, stricter environmental rules or carbon taxes come along later. It feels pretty forward-thinking, honestly. Might attract different kinds of investors, too.
And beyond mining, they've been making some big partnership moves. Signals a real strategic shift. First, there's that HPC colocation deal with Core 42. 72.5 megawatts set aside for GPU compute stuff. So they're basically renting out space and power for someone else's high-performance computers. A new revenue stream.
Right, leveraging their infrastructure.
But the headline grabber has to be the Fluid Stack deal. Over 360 megawatts of IT load at Lake Mariner. And the really interesting part, partly backed by Alphabet, Google's parent.
Yeah, that's the big one.
IT load just means the power needed for all the servers and GPUs. And this deal, they're talking multi-billion-dollar potential revenue. It puts them smack in the middle of the AI cloud compute boom. And then there's also that exclusive ground lease for up to 400 megawatts more at the Cayuga site. So more room to grow, again with low-cost, zero-carbon power.
These partnerships, they're absolutely crucial. They really validate Terawulf's ability to build and manage this kind of large-scale infrastructure. Attracting names like Google, well, that says something. And it's huge diversification away from just crypto mining, potentially more stable, higher margin income that isn't just tied to Bitcoin's wild swings. But, and it's an important but, how well can they actually execute on all these different fronts? Managing the mining, plus these complex new AI deals, that takes serious operational skill and focus. It's a massive opportunity, no doubt, but also a big management challenge.
Definitely something to watch. So how's the market digesting all this? Let's look at the stock itself and what might be coming up. Price-wise, it's been bouncing between $8.40 and $10.85 over the last month or so.
Yeah.
Currently around $9.13 as of early September 2025. Technically speaking, looks like support is around $8.80 to 60 cents, with resistance maybe up at $10.87. The 50-day moving average, that's near $8.95, and it's trending up. Importantly, it's above the 200-day, which is down at $7.40.
The golden cross setup.
Right, which usually signals some bullish momentum, yeah. The recent trend is stronger than the longer-term one. RSI, the Relative Strength Index, is kind of neutral to slightly bullish, 56-62 range, not screaming overbought or oversold. But yeah, volatility is high, as expected in the sector.
Yeah, those technicals definitely reflect the market mood. That upward trend, the 50-day above the 200-day, it shows investors are feeling, well, more optimistic lately. Despite the volatility you mentioned, it's a sector where momentum can really build, and the charts are kind of showing that right now.
And there's been some key news driving this too. Late August, Terawulf filed to increase their authorized shares from 600 million up to 950 million. That's basically to allow for more financing, more deals, including covering warrants for that Google partnership.
But it flags that dilution risk again. More shares potentially coming onto the market.
Exactly. They also closed that $130 million convertible notes deal, the one due 2031. Said they put hedges in place to try and limit the dilution from that one, though. Earlier in 2025, we saw analysts mostly with buy or overweight ratings, targets generally $11 to $14, and insider activity. The CEO and CTO had some stock units vest recently, some shares were sold, probably for taxes.
Which is pretty standard when options or RSUs vest.
Right, but their overall positions still look very long. The CEO, Paul Prager, holds something like 40 million shares. That's significant skin in the game.
Shows alignment, yeah.
And it seems the market's buying into the story. The stock's performance year to date, up over 90%. That's huge. A lot of that seems tied to the optimism around this AI and cloud compute expansion, seeing it as a growth engine beyond just Bitcoin.
For sure. And looking ahead, there are definitely catalysts on the radar. Short term, you've got that shareholder vote on authorizing more shares. That's key for their financing plans. Bitcoin price action, always a factor. You got to watch that. And the Q3 earnings, expected October 30th. That'll be the next real check-in on performance. Longer term, it's all about how that Google partnership develops. If it expands into broader digital infrastructure, that could be massive. Totally new revenue streams, less tied to crypto cycles. Plus, their whole green mining angle in the U.S. could become even more valuable if regulations tighten up on less efficient miners. Multiple potential drivers there.
Okay, so we've unpacked a lot. Financials improving, but still loss-making. Strategic pivots into AI, market optimism. But what does it all mean for someone thinking about investing now? Let's hit the risks. Stock-specific risks.
Well, dilution is the big near-term one, right? With that potential share increase. If they issue more shares, your slice of the pie gets smaller.
Definitely top of the list. Then there's the debt. That $130 million in convertible notes isn't insignificant. And of course, the Bitcoin price dependency. Even with diversification, a chunk of their business still swings wildly with crypto prices. Single commodity risk.
Absolutely. And beyond those company-specific things, you've got the broader market risks. Crypto is just volatile, period. That's the nature of the beast. There's always the potential for, unfavorable regulatory changes for proof of work mining in the U.S., especially around energy use. And while Terawulf has cheap green power, rising energy costs generally could still squeeze margins eventually. These are sector-wide headwinds.
So, pulling it all together, the overall investment thesis seems, well, mixed. The sources we looked at kind of average out to a 6 out of 10 rating. Positives, really fast revenue growth, getting more efficient operationally, they're a leader in green Bitcoin mining, and these huge strategic options like the Google deal. Lots of potential upside.
But on the negative side, still losing money on a GAAP basis, right? They consistently need outside cash, which means more potential dilution. Plus, the high sector risks, the macro risks. It all adds up. And yeah, the stock price is up, trading above moving averages, suggesting strength. But that volatility and dilution risk definitely puts a cap on things for a long-term hold, doesn't it?
Seems like it. So how should people think about the timing?
Well, for the short term, you could argue it's okay for speculation, maybe trading if you think crypto is heading up. It's highly correlated to Bitcoin, has that technical momentum. But long term, it still feels high risk.
Right.
Really only suitable for speculative investors who can stomach potential dilution, the wild Bitcoin swings, and the regulatory uncertainty. It's not a set it and forget it stock.
Makes sense.
Which kind of leads to a final thought, maybe for you, the listener. What really stands out to you when you look at a company like this? One that's shifting its whole model so fast, moving from something volatile like Bitcoin mining into this capital-hungry, fast-paced world of AI infrastructure. What are the trade-offs you see? How do you weigh those immediate risks, like dilution, against that promise of future growth and diversification, something to mull over?
That is a great question. A really good way to frame the challenge here. This has been super insightful, really helped clarify Terawulf's whole picture. Thanks for breaking it down.
My pleasure. It's a fascinating one to watch.
And to all our listeners, we really hope this analysis helps you get a better handle on Terawulf, the opportunities and the risks. If you found it useful, please do subscribe, give us a like, and definitely tell us in the comments what companies you want us to tackle next. Until then, keep digging, keep asking questions, and keep making those informed investing decisions.